I'm with Philip Newman now, an IPMI speaker and also one of the co-founders of Metals Focus. Philip, good to be with you, and congratulations. It's your over 1 year anniversary of the founding of the company.
Absolutely. Now, year 2, staff of 16, so going from strength to strength.
And Philip, last time we spoke was at the LBMA in Rome. I'm going to give you kudos here because when we last spoke, you had said to me, look, I expect gold prices to strengthen a bit in the short term, but in the longer term, you had seen weaker gold prices. What made you say that then, Philip, and how do you see the gold market set up right now?
Well, I think one of the key reasons that we saw prices weakening over, say, the medium term is that the investment climate really is not necessarily in favour of gold that we saw. So primarily, institutional investors have been, in a sense, a harder sell to convince them to come into the market. Now, this year, we're not seeing mass liquidations. That's really behind us. Right. But at the same time, we're not seeing a great deal of net new demand from the investment community coming in.
Now, we did have a few black swan events. I guess you could classify perhaps the Ukraine-Russia situation as such, and it didn't really help gold prices. How do you see gold acting as a safe haven? Is it still a safe haven today, I guess is my question.
I think absolutely it is, but I think investors now, as I said, it's a harder sell. When they look at the safe haven criteria of gold, they're also looking for yield at the same time. And I think the safe haven argument is always easier when prices are rising or there's a bit of volatility as well for the more speculative traders. But at the moment, gold prices are much more range-bound that we're seeing, and look at the stock market is doing generally pretty well. And again, it makes it a much harder sell in spite of perhaps their instincts saying that they should be buying gold for safe haven. If you haven't got the yield, it's just much more difficult to achieve that.
How about on the volume side, Philip? Are we seeing volumes in fact lower? What I've been hearing from a lot of dealers here is the demand's really not there yet, or has definitely diminished. What are you hearing?
Well, I think that's quite fair to say. I mean, last year was a fantastic year. We had very strong Indian demand over the first half of the year, coupled with obviously very, very strong demand out of China as well. If you sort of fast forward to 2014, the beginning of the year was actually quite strong in China. We had very good demand around Chinese New Year, Valentine's as well, but now of course it's backed off. We have a discount on Shanghai, and in India, well, now it is sort of a seasonal low anyway, and premiums are much, much weaker now than we saw at the beginning of the year as well. So
if it may not be the year for gold and silver, will the darlings really be platinum and palladium? That seems to be what everyone's been focusing on, especially now with the strikes going on and whatnot. What are your thoughts on the PGMs, Philip?
That's a very good question. I think in terms of starting with sort of palladium, the underlying supply-demand picture is very strong from a price point of view. The auto demand is still growing quite nicely. And of course, you've got the uncertainty on the supply side. Now, of course, that's much more important for platinum. It's very difficult to see, how the strike can really be resolved over the short term at least.
Now, Philip, before I let you go, it's the question everyone cares to hear about, its price forecast. Where do you see gold headed towards the end of the year, and silver and the PGMs?
I think in terms of the relative performance, I think we'll see gold and silver struggle relative to the PGMs. I think over the next few months, perhaps even into early next year as well, gold and silver likely, I think, to remain quite sort of range-bound. In terms of the PGMs, I think it's difficult to call on platinum, and I think looking at perhaps more volatility over the short term at least, but by the same token, the point when sort of the strike is resolved, a bit of a sell-off, but I think that shouldn't detract perhaps for a pick-up on both PGMs towards the back end of this year.
Fantastic, Philip. On that note, I'll let you get back to the conference. Thank you so much.
Pleasure, thank you.
And thanks for watching our coverage here from the IPMI. We'll have more for you in the meantime. You can email us at newsfeedback@kitco.com. Thanks for watching.